Hey guys, welcome back to another video. So I have to admit, I feel pretty bad because all those market update videos I do on a weekly basis, they look at what affects a dry van and a reefer, and they don't really look at what affects a flatbed. The reason I don't include any flatbed specific trends is because Sonar doesn't have as much data for flatbeds, and partially this is because many of the tenders are not electronic for flatbeds. That being said, I did do some research, some digging in Sonar, and I think I came up with a pretty good set of charts to help us understand the flatbed market a little bit. For those of you who are new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market. So if this is a topic that interests you, feel free to subscribe down below. So as I was saying, I did some research, I did some digging, I did find some charts on Sonar that I think will be interesting to you guys. And today we're dedicating this video solely to flatbeds. Ready? Let's go. Okay, so we'll start with the tender rejection index. And what I did is I looked 5 years back from 2018 all the way to 2023. And I am comparing the flatbed to the reefer to the van, just to show you the comparison. Now, the flatbed is in blue, the reefer is in green, and the dry van is in orange. Now, something that I always mention is that the tender rejection index has a very strong correlation with what the load rates are. So at the moment, we can see that right now, I'm going to zoom in here. Again, remember, flatbed is blue. The flatbed is doing better in terms of tender rejection rates than both the dry van and the reefer. Flatbed has 12.92% in terms of tender rejection rates on a national level on average. Reefer is at 5.57% and dry van is on third place at 3.51%. So this will tell us that flatbed rates are still higher than reefer and dry van rates on a big scale. Now, the reason I decided to look 5 years back is because I was trying to see some patterns, because I believe that patterns will help us predict what might happen next. Now, the first thing I noticed is that tender rejection rates for the flatbed, we're only focusing on the blue line right now. We can't see 2018, but they tend to fall in the beginning of each year. As you can see right here, 2020, then we have 2021, they fell, not by much, but they did fall. And let's see, 2022 started falling. And now 2023, they also started falling. Now, this is not surprising given that the load volumes for flatbeds during the first few months of the year are not there because this is an open trailer and weather sucks in the first few months of the year. Now, something else I want to show you is the correlation between tender rejection rates and the spot rates for the flatbed, right? So in the blue here is the average flatbed rate per mile. The green is the outbound tender rejection index. And what you can see, and this is from 2019, there is a huge correlation here, right? As tender rejections go up, so do spot rates. Now, what do we see right now is that the tender rejections are going down, although they're leveling off a little bit here, if you can see that. We'll see what happens in the next few weeks. But that means that the spot rates will also continue to slip down. Now, of course, me being the curious person that I am and fully understanding that while curiosity might have killed the cat died happy knowing what it does, I decided to dig a little bit deeper. Basically, I wanted to see if there is any significant correlation between flatbed rates, which is in blue, and the industries it serves. Of course, there's going to be a correlation, but is there one particular industry that really drives those flatbed rates? So what do we have here? Well, you can see a bunch of different colors. So again, blue is the flatbed rates, and this is from 2019 all the way to 2023. The orange line is the housing market, which means construction, right? Construction. The yellow line is the permits. We'll get into that in just a moment. Purple line, that is the aerospace and transportation market. The reason I'm looking at it is because flatbeds do transport parts for that industry. Then we have the manufacturing sector, which is the pink line. This is the aerospace. I should have made the arrow longer. And this one is the manufacturing, right? It's in pink. Then we have in red, which is this line that goes all the way down here. This is the motor vehicles. Then we have in green right here, manufactured metals. And finally in the blue, which is right here, going up like this. This is machinery. Now, something to remember. Pretty much all of these industries, maybe less the motor vehicles and aerospace industry, are somehow related to the housing, right? Because machinery you need for construction, you need manufacturing for construction, metals are important for construction as well. And from what I see right here, while the flatbed does transport a ton of different things for different industries, something that correlates the most is this orange line and the yellow line, which is the construction and the permits, if you can see right here. So what I did was I cleaned up this chart a little bit and I just put in housing and permits. So again, blue is flatbed rates, orange is construction, and yellow is permits. And what we can see is as construction picks up, so do those flatbed rates, right? It picks up here, it picks up here. Peaks, it peaks here. So it follows a similar pattern and it's correlating. Now, what about this yellow line? Well, the yellow line represents permits, right? Builders have to obtain permits before they can start actually building. So this yellow line basically tells us what we can expect in construction in the future, right? Now, if we look a little bit closer at, now this is 2022, 2023, so I'm going to make this a little bit bigger. You can see that construction has been slowly going down. But look at the permits. They're completely in free fall. So the permits tell us that construction is also going to slow down in the coming months, which is partially not surprising, again, because of weather. But at the same time, building permits can give us insight into consumer sentiment or consumer confidence. A rise in building permits may mean that consumers have more confidence in the market. They're willing to spend. At the moment, because the building permits are going down, what I expect will happen is it will take construction with it, and of course the flatbed rates. Does that mean that flatbeds won't have other loads to transport? Of course not. There will be other loads to transport. But just looking at the correlation here, I think that the housing market, at least from what I see, is the #1 telltale sign of what to expect in the flatbed market. Now that we did a small macroeconomic view of what's influencing the flatbed, let's take a look at what is happening right now, and we are going to start with volumes. Now with flatbeds, it's lane volumes, right? So these are the highest volumes. As you can see, this is from highest to lowest. The highest volume is coming out from Florence to Tampa, then Jacksonville to Miami, Elk Ridge to Hartford, Chicago to Houston, and so on and so forth. Now, in terms of lowest volume, and this will not surprise you at all, you will see that it's filled with the West Coast. So let's take a look. Los Angeles to Dallas, Los Angeles to Portland, Salt Lake City to Los Angeles, okay, Laredo to Houston, Los Angeles, Los Angeles, Los Angeles, Los Angeles, okay, Memphis, Laredo. The worst volume is currently in the West Coast, specifically Los Angeles, California. This is, by the way, the reason we got out of the flatbed market. The reason is because we got stuck in the West Coast and there was no way to get out, even for a bad rate. It was Los Angeles to Washington, Washington to Oregon, Oregon to Arizona, and there was nothing coming out. So we decided, you know what, it's enough. Time to give up. Now let me show you the load board to show you these volumes.
So I wanted to show you, even though we talked about volumes in terms of lanes, you can see that the originating market areas give you a good idea of what the volume will look like in that market area. So the first highest volume was from Florence, South Carolina, and you can see that this is for today. 823 exact matches for the flatbed, which is fantastic. Then we had Jacksonville, Florida. Now, Jacksonville, Florida is something that I had a hard time grasping because I work primarily with dry vans and reefers, and Florida is a horrible place to be. But for the flatbed, it's not as horrible. In terms of volume, it's pretty good. Then we have Elk Ridge, Maryland, and we can see also the volume is pretty good here. Now, in terms of the lowest markets with the worst volume, of course, Los Angeles, California is #1, 62 exact matches. We have Salt Lake City, Utah, also 39 exact matches. And then we had Laredo, Texas. Laredo, Texas was another low volume state, and yes, it's low volume, but the rates are not horrible here.
Now we looked at volumes, but what about rates, right? So this is a tree map that uses lanes for flatbeds. So you can see that the best rate right now is from Chicago to Los Angeles, paying on average $5,789. It did increase from last week. Now, from Chicago to Los Angeles, it's about 2014 miles. So that makes about $2.87 per mile. And you know what? That's pretty crappy from what it was about a month and a half ago. And on top of it, you're going to Los Angeles, a place where there is absolutely no volume, where you're going to get stuck. The second place, best place, is from Dallas to Los Angeles, $3,974. Now this comes out to about $2.76 per mile. Also really bad because again, you're going to Los Angeles, which has nothing there, and it's not a great rate. Finally, we have Houston to Denver, finally not Los Angeles, 3,595 miles, and that comes out to about $3.53 per mile. But Denver, again, it's not a good area to be in. So as you can see, I searched yesterday, Flatbed, Denver, Colorado, and this is for the 26th. So we have Englewood to Miami, Florida. That's 2,074 miles, paying an obscene amount of money, $3,000. I'm being sarcastic here. Then we have Pueblo, Colorado to Citrus Heights, California. 1,276 miles, paying $2,800 right here. Now, yes, it's over $2 per mile, but again, you're going to California. Okay, to Roseburg, Texas, 1,143 miles. Let me just do it like this so I can see where my spot is. Okay. $1,900. Don't judge me for my doodles, please. So yeah, the rates are not great at all. Look at these rates. They are pretty crappy. So Denver, Colorado is not the place to go. So from all the charts we took a look at, of course, we can see that rates are plummeting for the flatbed. And of course, it's not equipment specific. Rates are plummeting everywhere. Now, when we decided to get a flatbed back in November of 2022, the rates were over $3 per mile with deadhead. And about a month later, everything started slipping, partially, of course, because of the weather. Now, there are still places where you can find good volume, but that is mostly in the southeastern part of the United States. Now, the thing that worries me about a flatbed is the heavy correlation between flatbed rates and the construction industry. And from what we have seen, the construction industry has been slipping down and continues to do so. So it makes me wonder what the near future for flatbeds will look like. Of course, once warmer months grace us with their presence, construction will start to pick up. Construction pretty much stops during the wintertime because of rain, snow, whatnot. But I do not believe that we will see the same flatbed rates as we did in 2022 when they skyrocketed. Everything else went down, but flatbeds were doing really, really well. The question is, will flatbed rates be higher than both dry van and reefer rates? And in my opinion, flatbed rates will be lower than reefer rates come around March or April, but higher, of course, than dry van rates. I would love to hear your experiences with the flatbed right now. How are you guys doing? Where are you running? What are the rates like? Other than that, I hope you enjoyed the video and I will see you in the next one.